U.S. stocks are tumbling for the second day. The Dow is already down 1,000 points after dropping almost 1,700 points yesterday.
Now, I understand that this heat map is scary, guys, so let's go ahead and Studio Giblify it. That's a little better. Now we can all relax. Jokes aside, in the past week, stocks have seen a significant decline, with Magnificent 7 leading the charge. Apple being down almost a quarter of its entire market cap, and this is just within the past week. Nvidia is also down 12.5% and Tesla 17%. Now, if we take a look at the 3-month performance, it gets even worse. Nvidia is down 35% in the past 3 months, Apple 30%, Tesla 46%, and Google 25%. Now, this is all because of the Trump tariffs. Now, China is the main country that US actually does trade with, so that's the most important one to watch out for tariffs. Now, in January of 2025, both the US and China had 20% tariffs on each other. Then in February of 2025, Donald Trump raised it by 10%, and then another 10% in March. Now, this was to address the trade deficit that the US has with China. And then on Donald Trump's Liberation Day, he added another 34% in reciprocal tariffs. In response, China swiftly added a 34% tariff on the US, and now Donald Trump has said he's going to add another 50% tariff on China, which has actually gone into effect today. Now, in response to this additional 50% tariff from Donald Trump, China has announced that they will add an additional tariff of 84% on US goods beginning April 10th, which is tomorrow. Now, this sets the tariff from US on China imports to a total of 124%. In China, their tariff on US good imports is 138%. This effectively stops all trade because pretty much no company is willing to pay these kind of prices. They will move their operations elsewhere from China to avoid these 124% tariffs. With China having 138% tariffs on the US, they'll just find a different country to get imports from. Though I put it in simple terms, such as the US will just do this and China will just do this, these things are not easy and the impact will be detrimental. It costs a lot of money for these companies to move their operations into a different country, and it is just going to slow down global trade as a whole, and we're moving closer and closer to a global recession, which is terrible for everyone. For example, Goldman Sachs has raised its odds of a US recession to 45%. This is the second time it has increased its forecast in a week, and this is amid a growing chorus of such predictions by investment banks due to an escalating trade war. Like we just talked about, the tariffs on both US and China going up continuously leads to a global trade war. This will lead to less economic growth, which leads to a recession. JP Morgan has also raised its recession odds for this year up to 60%. And no, this is not a United States recession, this is a global recession. Financial markets reacted sharply to the tariff announcement, with the S&P 500 suffering its worst day since 2020. Consumer confidence has also plummeted, with the University of Michigan statement survey showing the highest percentage of Americans expecting unemployment to rise since the Great Recession. Now, if we move on to the Fear and Greed Index indicator that comes from CNN, we can see that it currently sits at 3. This is personally the lowest score I have ever seen it have. It is made up of 7 different fear and greed indicators, which helps its validity. Now, BlackRock CEO Larry Fink says that we are probably in a recession, but don't sell your stocks just yet. I would take this statement here with a grain of salt because, of course, he doesn't want you to sell your stocks. That would make his stocks go down further before he might have the chance to sell if he would like to do that. It's not too uncommon that you will see investment banks maintain a buy rating on a certain stock, and soon after they'll sell, because they don't want you to sell your stocks before they're able to sell theirs. It's a classic market manipulation tactic. Now, Trump has publicly came out with a Truth Social saying that this is a great time to buy. Now, although I don't disagree with him, I would also take this with a grain of salt because he's got a lot on the line. I definitely think that now is a great time to be buying stocks, and I'm going to show you some of my favorites right now. But if you do have cash on the side, I wouldn't throw everything you've got into the market at this moment. I would definitely continue to hold some on the side as long as we keep going lower and prices get cheaper for these stocks. On the list of stocks that I think are a great buy right now is Intuitive Surgical, ticker symbol ISRG. Now, this company specializes in medical robots. This little excerpt here explains a little bit about the company. The company offers the Da Vinci surgical system to enable complex surgery using a minimally invasive approach. Now, for surgeries done around the world, this will help improve the efficacy and minimize injury. If you've ever seen the show My 600-Pound Life, you've seen these robots actively in action. You've got Dr. Nowzaradan, who performs surgery using these robots. Now, if we take a look at some of the valuation metrics for ISRG, some people would definitely say that it's expensive, with a forward P of 57.6. Now, this actually is quite high, but it's a market leader in a space that's rapidly growing. Its margins and profitability is pretty damn good, right? They got the gross margin of 67.5%. Let's go ahead and take a look at some of the financials. Here we can see the net income year over year for Intuitive Surgical. In 2021, they made $1.7 billion in revenue, and then in 2024, $2.32 billion. And we can see that the revenue trend is definitely upwards. If we go ahead and turn on the company estimates all the way up to year 2027, we can see nice, consistent revenue growth. Now let's also take a look at free cash flow. This is one of my favorite metrics to look at because it shows how much a business is actually going home with at the end of the day, dollar-wise. You see in year 2024, they had $1.3 billion in free cash flow. Yet in 2025, it starts to accelerate, over doubling from 1.3 to 3.04 billion. And in 2026 and 2027, both revenue and free cash flow continues to grow. Analyst price targets for the stock definitely favor upside, with an average price target of $632 per share. Currently, ISRG sits at around $450 per share, so that accounts for quite a bit of upside. Currently, there's only one covering analyst that says to sell, 14 say buy, 8 say outperform, and 10 say hold. Of course, extremely important to remember that these are just estimates from analysts on Wall Street, and they can change their minds in a heartbeat. However, the revision trend for the price target seemingly mostly goes up. The next stock on my list that for me is a screaming buy right now is AMD. Now, this thing has had a rough time over the past year, and that's because it's been compared to the likes of Nvidia. It did go up to $200 per share back in 2024, and that's because people saw it as the next Nvidia. When AMD started to kind of underperform, it got punished very hard, and now it's back down to $80 per share. If we take a look at some of the valuation metrics, this thing looks very, very cheap, with a forward P of only 18. Now, when I show you the growth estimates for future years, you'll be surprised. One reason it gets punished so hard is because the margins compared to Nvidia are very, very bad. Let's just go over to Nvidia real quick and show you the margins. Here, there's a gross margin of 75 and an FCF margin of 46.6. Back to AMD, the FCF margin is only 9.3, FCF standing for free cash flow. Let's take a look at some of the financials, such as total revenues compared to net income. Net income being the blue and total revenues being the gray. We can see that in recent years, the revenues have grown, kind of stagnated a little bit in 2023, but the net income has stayed roughly the same and even declined since 2021. Now that's rough, and that's probably the main reason as to why AMD has had such a hard time in the past year. But let's go ahead and turn on estimates for future years from analysts all the way up to 2027. We can see that revenue starts to accelerate along with net income. Free cash flow is also expected to absolutely take off, with only $2.4 billion in 2024 and then having $11 billion in 2027. Of course, again, extremely important to remember that these are estimates and can always change. If AMD can execute on these estimates, however, it will be far higher than $80 per share. Let's also take a look at some of the analysts' price target. The mean price target is $144 per share, with AMD's current price being around $78. That accounts for almost a double in the stock price. There are currently 24 analysts that say buy, 7 say outperform, 17 say hold, and 1 says sell. Funnily enough, the next stock on my list is Nvidia. I personally own both Nvidia and AMD, but I would be careful allocating a lot of your portfolio to both of these, as they do operate in the same industry, which is semiconductors and data centers. Now, as we saw earlier, the margins for Nvidia are absolutely incredible, and this thing is a cash machine. Let's go ahead and take a look at some of the profitability financials. The company logo for Nvidia is a nice bright green, so it makes for a perfectly fitting chart. The total revenues are the green bar, and then the net income is the blue bar. As we can see, the revenues and net income have been accelerating in the past couple of years. In 2023, they made 27 billion in revenue, and then in fiscal year 2025, they made 130 billion in revenue. So this is over multiplied by 5 in the past 2 years. Also, if we take a look at the net income, it has just exploded. In 2023, they had 4.3 billion in net income, and then in 2025 is 72 billion. Now, if we turn on estimates for future years all the way up to fiscal year 2028, the chart is just absolutely beautiful. Revenues continue to climb higher and higher, even though they already make so much money. Net income also continues to climb higher and higher. Again, this company is an absolute cash cow. It generates so much free cash flow. In 2024, they generated 27 billion. And then in 2028, they're expected to generate 144 billion in free cash flow. If we take a look at the price targets from analyst estimates, the consensus and mean price target is $168 per share, with Nvidia currently sitting at around 100. The lowest price target out of all the covering analysts is $115 per share. 45 analysts say buy, 12 say outperform, and 5 say hold. There are currently no analysts who say sell. Nvidia, AMD, and ISRG are just 3 of the stocks that I believe are great buys right now, and I will be making more videos soon on more stocks. But that's all for today's video. If you enjoyed, go ahead and subscribe and leave a like. I'll see you all in another video soon. Peace.